Investors are capitulating with the CNN Fear and Greed Index back into extreme fear territory. This all comes as investors fear a deeper US slowdown to economic activity following the data out today. And I don't say this lightly, but this was really just a mass liquidation. And the reason we know this was a mass liquidation is because look at oil. Oil is down over 2.5% today on fears of the consumer slowing down. So like this is not just a rumor or like a one-off data point. There is now substantial fear, enough fear to move global oil markets down 2.5% in a single day. That's a lot of fear. Bond yields are plummeting down 9 basis points today. That doesn't happen all too often. And essentially what that means is investors are going out and buying bonds. Some of that has to do with the liquidation in stocks, a flight to safety, if you will. But a lot of that does have to do with investors expecting, the Fed to be cutting rates and for treasury yields just to naturally come lower. But here's the dead giveaway of this being a mass liquidation. Gold is down 1.5% today. Well, wait, isn't gold this asset that you would want to be in if we have higher inflation, kind of stagflationary environment with weaker economic activity but higher inflation? In theory, yes. The fact that gold is down 1.5% today just shows you the extent of the fear in markets. And here is a headline that hit the Bloomberg terminal today. It says US Treasury yields fall further after more US data showing a slowing economy. 10-year yield now down 10.5 basis points to 4.28%. You've bounced back a little bit from those lows, but still, it is a really good day for bonds and a bad day for bond yields. And I mean, just take a listen to this comment from Scott Bessent. He is your new Janet Yellen, if you will, your new Treasury Secretary under Trump. And this is some statement here. U.S. Treasury's Bessent says U.S. economy is brittle underneath due to excessive spending by the Biden administration. Wow. Our Treasury Secretary just said the economy is brittle. Like, could break at any time. Brittle. Yeah. That's not a good sounding headline. Bessent says our goal is to reprivatize the economy after Biden. And Scott Bessent says he is paying particular attention to the 10-year Treasury yield, believes that Trump policies should reduce it, which overall, that's good for markets. But I mean, when you have these growth concerns, and if that's the reason why treasury yields are falling, that's not exactly great for markets. Now, we had a couple of catalysts that caused the fear this morning in markets. First and foremost, it was Home Depot. Home Depot is not optimistic about 2025. That puts them with Walmart and Amazon. And some people are calling this now concerning. Home Depot is targeting total sales growth of approximately 2.8% for 2025, with comparable sales growth of approximately 1% for the comparable 52-week period. So Home Depot's saying, yeah, we're really not going to grow much. And their commentary was even more alarming. They said people are just slowing down their remodeling plans. They're just not doing as much to their homes anymore, which, one of the areas people tend to improve on during at least a decent economy is their home. Like, people want a new kitchen, they get a new kitchen. Okay? That's kind of a troubling sign. Add that to the list of real estate problems we've had recently, and yeah, you get a little bit more fear. But also a big part of the news today was February CB consumer confidence that fell to 98.3. The estimate was 102.7. The previous month was 105.3. This is the lowest since April of 2024, which, is about a year ago, but you're kind of on a slippery slope here. That's a big fall from last month. And just adding to the liquidation, Bitcoin has now hit a technical bear market, falling 20% from its highs. And Bloomberg's Magnificent 7 index extends its fall from its record, now down 10%. So even Mag 7 is now in a 10% technical correction, which again, normally you want to be buying when markets are this weak, but there's a lot of concerns about the economy. And maybe it was just our expectations were too high, and now we're just, re-rating expectations. That is definitely possible, and that's going to mean more Fed cuts. To some extent, that's good, but the fear really is, what if we did start to get closer to a recession? That is far off of consensus at this point. And that's why investors are so jittery and jumpy today. Now, in the news last night, Nvidia's H20 chip, their orders are jumping as Chinese firms adopt DeepSeek's AI models. According to sources, this did not help Nvidia at all today, with Nvidia that was down over 3% for a majority of the day, still down about 1% at the time of recording this video. Virtually all of big tech is down 1 to 2% today, besides Apple, which has really been the juggernaut of recently, up 0.59% at the time of recording this video. And for the first time in quite a while, CNN's Fear and Greed Index again plummeted today. No surprise there, but you are now into extreme fear territory, coming in at 23, whereas just yesterday you were at 29, which is only technically in fear. So normally it pays well to be a buyer when markets are this fearful, and specifically when the CNN Fear and Greed Index is in extreme fear. But boy, can it be scary when markets are this bearish. Market momentum is in extreme fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, extreme fear. I think that's an important thing to point out, because this usually stays neutral or bullish, like most of the time. Okay. I can't recall the last time you had put and call options coming in at extreme fear. Like, that means really nobody's going out and they're not buying calls right now. Like, everyone's going out and buying puts. That, I think, is a very contrarian bullish indicator. Market volatility is neutral, safe haven demand in extreme fear, and junk bond demands currently in fear. So again, difference in 20-day stock and bond returns. This basically means TLT is going up, bond prices are going up, and stocks are going down. I mean, we could see this clearly. That's part of where we started this video. If you look at the last couple of days, bonds have actually done very well. They've been green now 1, 2, 3, 4, 5 days in a row. You had a bit of a gap up today. So investors, they're going out, they're selling stocks, and they're buying bonds. They're liquidating their bond position or stock positions and going out and buying bonds. That's great. Bring down 10-year treasury yields, but it is a flight to safety. When bonds rally, usually markets are not doing all too great. The percent of stocks trading above their 50-day moving average is flat on the day today, so I actually think that's kind of surprising. You're at 39.61% of stocks trading above their 50-day moving average, so like 60% or so of stocks are below their 50-day moving average. That is a pretty bearish reading, but it could get worse, so keep that in mind. The most recent AI investor sentiment survey shows bullish investors fell from your high on February 12th last week, from 47.3% down to 40.5%, but that is still very bearish overall. 40.5% of investors are bearish, 30.3% are neutral, and 29.2% are bullish. So, like, yeah, it's ugly out there, to say the least. Now, we did get the S&P Case-Shiller home price year over year that came in at 4.5%, largely in line with expectations. Month over month, home prices actually fell from down to negative 0.1% versus expectations of 0%. Again, CB consumer confidence, we went over that plummeted, and that was really the big data that helped kind of add fuel to the fire to these growth concerns. Richmond Fed Manufacturing Index was actually positive today, coming in at 6. You were expecting -3. So that was good. Richmond Fed manufacturing shipments came in at 12. You were expecting -4. And services revenues came in at 11. You were expecting 7. Did the markets care? No. Dallas Fed Services Index, on the other hand, came in weaker than expected at 4.6 versus estimates of 9. So that was pretty bad. Dallas Fed Services revenues came in at 8.2 versus estimates of 7. So kind of rough there. And your 5-year bond auction did come in lower than expected at 4.123%. So some really good demand on your 5-year bond auction. I can't think of a better day to have a bond auction when markets are liquidating and freaking out. So not a big shocker. Those yields came in lower. That continued to send bond yields lower. So that was actually a positive today. Now, looking ahead towards tomorrow, we don't have much for economic data. So could we see a bounce tomorrow? I actually think it's highly probable. Now, our big catalyst tomorrow will be Nvidia. But tomorrow, we do have Fed Barkin that speaks at 8:30 in the morning, new home sales for January, and new home sales month over month for January. A lot of oil data. We will get the crude oil stocks change. We're expecting positive 2.34 million. Given how volatile oil has been recently, if you have more reserves than expected, like we did last week, you could see, oil continue to fall on that. More supply usually means lower prices. Okay. I actually think that could be kind of important for oil tomorrow. We'll see if it affects the markets. You do have Fed Bostic that speaks at noon and a 7-year bond auction tomorrow at 1 p.m. I believe this is like $40 billion, roughly like the same as the 5-year auction today. So the auction tomorrow at 1 p.m. could be important as well. Now, tomorrow morning, we will have earnings from Lowe's, Advanced Auto Parts, AB InBev, Stellantis, and UWM. But again, really tomorrow and after hours is the big ones for the broader markets. Nvidia, obviously important, Snowflake, C3 AI, Salesforce, IONQ, and some others. Nvidia, I think, is actually in a pretty good position this earnings season. I think there's a lot of fear out there that still DeepSeek's advancements are going to mean people need less compute. And I don't think that is accurate. I think long term, we need a lot more compute than we currently have now. If this world's going to turn into something like the Jetsons, which I think 50 years from now, if we just time traveled ahead 50 years, you're going to need a whole hell of a lot more compute. Now, short-term semiconductors can be pretty cyclical, but I actually think Nvidia stock is set up nicely with all of the fear out there in the semiconductor industry for the typical Nvidia special, the beat and raise. But I think that beat and raise is going to be rewarded more than in other quarters where Nvidia just beats and raises and people say, that's it. I think a beat and raise this time is going to be a big sigh of relief. And I think data centers, AI stocks can start to come back. Momentum can start to come back a little bit. So I think that will be a huge catalyst for markets, which is interesting because last week I thought Nvidia would be really a catalyst that didn't matter as much. But now, following the couple of days of momentum and general weakness, Nvidia is a lot more important than it otherwise would have been. Now, not to leave out the earnings today and after hours, you are going to have Kava, AMC, Axon, First Solar, Lucid, Instacart, Lemonade, Workday, Zeta, and Intuit. Obviously, some big names there, but again, really not going to move the broader markets. Thursday and after hours, you're going to have SoundHound and Dell. You also have some smaller companies like Rocket Lab, Archer, Clover, Duolingo, Transmedics, and Opendoor. Thursday pre-market, Norwegian Cruise Line and Vistra Energy. Not too much going on there. Friday pre-market, you will have Fubo. Now, just taking a look at the SPY, the S&P more broadly, you did sell off to 589. 56 was your low of the day today. You did reverse back to the upside, and it does look like you formed a bit of a hammer candlestick pattern. We'll see what happens into the end of the trading day, but as long as you see this hold and we move higher from here, or at least close around where we are right now at about 595, that actually looks pretty good for a reversal. Again, a bounce to the upside. This just basically means sellers took over this market in the beginning of trading, buyers stepped in, sellers got exhausted and pushed the markets back towards the high of the day. That's what a hammer candlestick is. It's a sharp reversal in downside momentum. So if that continues, that could be a good sign for a bounce. Now, I will point out we did flush below the 100-day moving average at $191.81. It looks like we're going to close above that, minus anything dramatic happening here in the last hour or so of trading. That is a positive, okay? Last time we had something like this where we touched the 100-day moving average and bounced from the lows, you actually went up almost 2% the next day, okay? Now, could that happen via Nvidia earnings? Will this just prove to be an overreaction that, investors overreacted thinking we're going into a recession and all the fears out there? Maybe, probably. Now, I think we still have to get through the rest of the economic data throughout this week, but I think markets are actually set up favorably. Now, Thursday for economic data, we will get durable goods orders month over month. Again, this is another one of those very important data sets. Last month was negative 2.2%. We're expecting positive 2%. God forbid that thing comes in negative or something. That would be really bad. That would just basically mean like the last 2 months were terrible for durable goods. If we come in positive 2%, that means we were basically flat over the last 2 months. That wouldn't be terrible. GDP growth rate quarter over quarter, second estimate for Q4 will be coming out. Last estimate we had was 3.1%. We are expecting 2.3%. So we are expecting a big drop, but we're already expecting that. So if we get it, not terrible. But if we were to come in like under 2%, then that would be a bigger issue for markets. You will also get initial jobless claims expecting 225,000. Last week was 219,000. Fed bar will speak at 10 a.m. Pending home sales month over month at 10 a.m. Kansas Fed manufacturing data, as well as the composite index for Kansas, will be coming out at 11 o'clock in the morning on Thursday. Fed Bowman speaks at 11:45. Fed Hammock speaks at 1:15, and Fed Harker speaks at 3:15. So you really just have a lot going on Thursday, and that will lead into Friday as well. Friday, you are going to have core PCE price index month over month, expecting that's actually going to be higher than last month, 0.2%, expecting that to come in at 0.3%. Personal income month over month is expected at 0.3%, which would be lower than last month's 0.4%. So that would be good. Personal spending, I think this is the big catalyst, is last month was 0.7% month over month. You're expecting 0.1% month over month. So we really need that spending number to come in okay. If not, again, there's going to be more concerns about, recessionary dynamics or growth slowing down at the bare minimum. You will also get the goods trades balance advanced data for January, expecting that deficit, if you will, to be lowered a little bit, expecting that to come in at 114.7 billion, down from 122.11 billion in the previous month. And retail inventories, wholesale inventories will also be important because this will feed into a new GDP estimate. You can see here the next GDP Now update is Friday, February 28th. So this Friday, the last update we had was 2.3%. So if that inventory data comes in bad and the goods trades balance comes in bad, then you're going to see that GDP estimate come down. Again, growth concerns, which would not be good. Chicago PMIs will also come out at 9:45. So really, Thursday and Friday are data dumps. Tomorrow, not much for data, but Nvidia. So really, Wednesday, Thursday, Friday, the next 3 days are just going to be wildly important for markets. Let me know what you guys think about this information down below in the comment section. Whether or not markets continue to fall from here, I think again really comes down to, do growth fears continue to get worse? Do we continue to see expectations fall for economic activity? And at the same time, inflation remains stubborn. If some of your inflationary dynamics come in lower, then that's good. Now, I will say, if you look at like the VIX is already at almost 20, right? and it actually hit, I believe, close to 21 here recently. Maybe that was this morning. Yeah, this morning it was at 21.48. Like, you're already very high on the VIX. You're already very fearful. If we start to get any good news, then that's going to lead to, a bounce. And I wouldn't rule that out at this point at all. I think your odds of a bounce have risen as markets continue to get worse. So again, let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.